Welcome traders, I'm Adam Harris. In today's video, 3 questions. How are the markets poised ahead of a possible US default? 2, which markets are great for day traders? And 3, which are my favorite tech stocks right now? Okay, so let's kick off by having a look at the economic calendar. The first thing is really that there's a lot of news this week. There is a lot, it's a lot of high-level news, a lot of PMI data, which is really just going to be reflective of the state of inflation and spending. And really, we know what the cost is. We know what's going on at the moment is that it's really corporations that are squeezing it at the moment, squeezing people's savings from COVID, post-COVID. And so this is really where that's going to be the case. And we'll see at a point, there'll just be, and you can see, for example, in the US, they're having, they're protesting on the Brooklyn Bridge now, raises against rate increases in rent. So it's going to start to become a global thing. People are going to start to protest basically increasing in prices, which are unnecessary. One great example of that is airlines. Airlines were bailed out during COVID, and right now they're just absolutely rinsing everyone. So they're, it's almost as though we're being punished for going back on holiday now. So it's just a bit crazy. Anyway, what I would draw your attention to, though, is the Kiwi potential monetary policy statement with a rate hike. There's a potential 25 basis point change here, but the reason is because it's almost always a very volatile event. So if you have any open positions, this could swing 100, 200, 300 pips. It's very possible it could just shake and then do nothing and then go back to normal. And then the next thing I'd highlight here, for example, we do have FOMC on Wednesday. Let's see what the talk is there. This is an interesting thing because a lot of people are absolutely 100% convinced that the US is going to go back to reducing rates in order to stimulate the economy, whereas I'm of the opinion that they're actually not going to do that for as long as they can. In other words, I think they're going to try to, if they can, absolutely avoid doing it for the next year or two. And even when they do reduce, if as long as the world isn't falling apart, they're going to do it very reluctantly. I really think they want to get the world accustomed to higher interest rates, which would, believe it or not, be better for the whole planet. It's reducing the rates that really is causing part of the issues that we have with regards to US deficits and other things. So we need to get used to higher interest rates to settle and to reduce debts. That's really the goal here. We've got unemployment claims on Friday. Okay, but basically there's a lot of news this week. I would keep all of that in mind. With that being said, let's go to the charts and have a look and see what's going on there. Okay, so starting off here very quickly, looking at the VIX. The VIX is on the low end, no signs of panic or chaos in the markets. And a lot of people are saying, well, you won't see it coming and you won't. But actually, we usually see in the 6 months in the run up to a market, a bear market kicking off, there are usually plenty of signs. Okay, so right now, people are still scarred and suffering from PTSD from the 2007-2009 global financial crisis. They are watching everything. And we're not the only ones watching it. There's plenty of very talented analysts that are also keeping an eye on it. And yes, there's a lot of talk about a housing crisis in the US and that, there's all kinds of craziness going on. First of all, that kind of stuff, those convos is always going to be around. It's always going to be around. It was actually around before the 2007 thing. In 2011, there was a massive craziness on panic as well, that countries were going to default and all kinds of things are going to happen, and people should just kind of load up on gold and silver. All right, so please understand that off the top of my head, at least 50% of that is sheer conspiracy theory garbage, most of it. Okay, the real stats looking at certain things, which is what the real professionals are doing, or at least experienced people are doing, are not showing that. And for example, if Warren Buffett isn't worried, I'm not worried. I'm not worried. Okay, so it's just not that. And so my point here is that there are no real signs at this time. And if there are pocket bubbles, so for example, the housing crisis, if that's located only to the US, for example, and it's a pocket bubble, then that's fine, let it burst. And I say that not because I want people to suffer, but if any market becomes ridiculously overpriced, then it is going to have to reset. And rather that one little market resets rather than the global markets, if you take my meaning. Okay, let's look at the dollar index. So the dollar index, we know, was breaking out to the upside, looking very nice and bullish from last week. Bit of a stall here. I do think it's got some room to go, but it sits around that 103.50 mark. It looks bullish enough on the weekly. It can keep going. I think for now it's got room to go up to 104. I would say the monthly is starting to look more and more bullish, and it's really important to see how we close. If we close right near the highs, right near this 104 level, then we're likely to see that it go back up to 106. Okay, so that's kind of crucial in that respect. But this week there could be, whereas if the market is not going to be as bullish as it was this time last year, then it's likely we might just see a retracement, any kind of pullbacks this week, looking for continuations to the upside. If we look at euro dollar, again, same thing again. We got Friday, there was a relatively sort of bullish day compared to Thursday. This could just be preparing for a normal retracement back up into these previous sort of back up into this market structure here, and then looking for price to find some resistance and a continuation to the downside. But I would say that for now, this looks more bearish than bullish. Okay, a real change, it'd have to come up and break this previous high here for there to be any difference, but it does look like that's very much the case. Sterling, again, keeps trying to find support, try to find support here, try to find support here. It's not dropping as far. It is a little bit more bullish, a little bit stronger than that. We can look at the individual indices now and see how they look, but you can also see it's in an area where it could potentially find support, which is interesting. Find support here, but also find resistance where it is here. So we're at a fork in the road, which happens every few months. Every now and again, we get to a place where the weekly and the monthly and the daily are all conflicting with each other. We need to see which way they ultimately unfold. Aussie dollar here, sort of very much range bound, sitting there at the bottom with an indecision. Weekly candle again, not giving much away there. We look at Kiwi dollar starting to strengthen, push up a little bit higher. To me, looking quite strong. So we've got sterling looking strong, Kiwi looking strong. And what's important about this is that they are looking different. They don't look the same. And that doesn't happen when, like this time last year, everything looked the same. We just saw Aussie was weak, Kiwi was weak, Euro was weak, Pound was weak, because that dollar was completely in control. Right now, despite the so-called looming iceberg up ahead, Titanic iceberg, the markets are kind of doing their own thing. And that is not because the markets aren't paying attention. The markets are very much paying attention. You just have to scan through your Twitter timeline to know this, that in fact they're obsessing over it. But at the same time, it seems as though the markets are okay. We've got a nice little bit of an uptrend here on dollar yen. I think it's going to continue to push higher, or at least that's what my trading plan is. And so I've got some open trades on that. We've got dollar Swissy also looking particularly bullish. That was kind of obvious. We had bullish divergence here, and we had a nice little turnaround. We've broken above the high. So this week I'm hoping to see if we'll head back up towards these highs. I shouldn't say hoping. This is my expectation. See if we can find support where it is now and do another leg up to 0.9. That's what would provide some trading opportunities there. You can see dollar CAD as well, sort of hovering a little bit where it is. I want this to push and break out to the upside. It's right on top of the moving averages here. The moving averages are all tangled. It's a mess. We look here on the weekly, it's a bit of a mess, and it's also indecision candles here. So CAD just isn't offering much clarity at this time. Let's see if there's anything happening on the ruble. I think with the way that the G7 meeting is going, it's not going very well for Russia at this time. They've seemed to have taken over Bakhmut, but it's very much destroyed. So not really seeing much gains there. Okay, so let's look at the go through and display my calculated instruments, and let's have a look at these individual ones. So what does the euro look like in isolation? It's pulled back. It's got a bit of a bullish candle here. So if we break the high of this, we could see that euro continue to strengthen this week. And remember, that's just a general analysis of the euro pairs and the GBP pairs in isolation, which means there could be buy opportunities on some of the euro pairs, even if the dollar is still stronger than all of them. Sterling, for example, should be nice and bullish. There we go. It's kind of up at these old highs, a bit of a potential double top here, a little bit of bearish divergence, but it still looks pretty strong to me. Then we compare that. We've got Aussie dollars looking nice and strong, looking good. I think the Kiwi was also looking good. Let's see what CAD looks like. CAD has very little clarity over here. I'm going to get rid of this because we're just crisscrossing it all the time and it's just range bound. So CAD is, what does that mean though? In terms of trading opportunities, it means that, yeah, if there's a strong, maybe GBP CAD has got a good one. It's always great if one currency pair is weak and the other is strong, or the other is strong, and we go diagonally, we look for opposite extremes for trading opportunities. But at the same time, if you've got a really strong pair and the other side is just neutral, you're still going to get a trend on that. Then we have the yen. Okay, the yen is obviously continuing to strengthen. So we're going to see if that's going to be the case here. Okay. And it's interesting when I say that, because in isolation it appears as though they're continuing, but actually what's happening is all the other pairs are strengthening over the yen, which means it's weakening. Right, let's go and look at gold. Excuse me. Okay, so gold, I was looking for this to come back and retest it. It's now below that 50-period moving average. We have had a bit of a retracement here on Friday. Overall, this is just looking very, very bearish. And this is important to me, I think, as to how this closes. If we close as a fully red candle near the low, for the month of May, we're likely to see gold continue down, certainly to 1900 and potentially as far as 1800. If, on the other hand, it can close back up near the highs, then we might be looking at finally seeing gold move on to new highs. And so this week, I haven't taken any trades on it yet. I'm actually looking to see if gold can come back up above this level. But I would say we've got a solid daily downtrend, and we would need to see a shift in that. This weekly uptrend has had its lows broken. So we're getting some mixed signals here. I'd really prefer to see this come up, start to really break that momentum, that angle of momentum, and then it's got to do very well. In other words, before I would take this seriously, I need to see it heading back up towards 2025, and then I'd start being more bullish on it. Right now, it's a wait and see. It hasn't given us enough clues as to what its next moves are. Look here at silver. Silver's already had quite a bit of a correction within a monthly uptrend. By the way, we've got high lows, high highs here. It's back into these old highs. If this decides to produce a bullish candle this week, it can very much maintain its higher time frame uptrends. But right here, you can see that very bearish divergence, and we've gone into a downtrend. So this hinting more at further downside, basically. But I'm just not going to jump on that just yet. Copper offering no clarity this week, just hovering around where it is. Potentially it's looking to do a move back up to find a bit of test resistance. Natural gas continues to climb a little bit higher. So that was very nice, kind of talking about this as over the last couple of months as it eventually turned around. I would have thought that was really the best setup, but we still managed to do a lower low before turning around. So this week I'll be looking for continuations to the upside on that. We look at West Texas crude. Just here into a bit of a triangle forming here. There's not a lot going on. It's basically just treading water, and I'm not finding any attractive trading opportunities on that. Okay, I've even highlighted Brent crude in this box because it's just not doing anything. And when you look at it here, sort of 6-7 months of going nowhere, we really haven't had anything like that in the past. But it's obvious. We know, we've got a lot of policies in place and everyone's navigating around Russia and Putin. And the goal is ultimately, and this is the tragedy for Putin from his side, is I don't think most of these countries are ever looking to re-engage with Russia anymore now. I think like that bridge has been burned. And I think that even if Putin decided to kind of, exit or extricate himself from Ukraine, I don't think the other countries are looking to basically do business with Russia again, or certainly not for the next few years. And so this is the state of that. We can really just see that right now the markets aren't concerned about oil. They're not worried about it. And it's not really important to them. So this is interesting here. We had, so wheat, very bearish. Look at that. Just looking, it's really down at these lows. When it gets to these kind of historic lows, I would certainly, and don't forget, by the way, that Ukraine is one of the biggest exporters of wheat. It's absolutely huge. Sunflower oil, so many, many, many things at the moment. So certainly we just need to be aware of that. You'd think that the demand would be pushing it higher, but that isn't necessarily the case. Okay. Then we've got coffee. Continues to sort of stumble around here, but looking more bullish than bearish. That monthly also looking, it wants to come up and test this level. If it breaks through this, we'll see it continue to move higher. We've got sugar that's on a high, no pun intended. Actually, that was completely pun intended. This really does need to come down. It's desperate for a bit of a correction down to $24 or $22. It's got to do it before it can continue. We've got cotton, very nice and bullish. I love the way it's looking here. It's looking relatively healthy. It's back into the zone. That zone has been there for a while, so I'm just going to extend it along there a little bit further. It's got to get through that, and then it should be looking good. But then we've got a series of higher lows. We could be leading to a breakout. And look at the MACD. The MACD is trying to break high already. So the MACD is bullish. Okay, the implication is that this is very nice and bullish, and it has a good chance of breaking higher. Moving on to the global indices. I have to say, they continue to hold. So although we've dipped a little bit bearish here on the MACD under the central line, for the most part, they look okay. This year is going to be a garbage year. What do I mean by that? I mean that expect it to be up and down or all over the place. And hopefully that means that from 2024, it's likely to continue to go. And a big part of that might just very well be the fact that until we see corporations starting to accept that they can't keep rinsing everyone, because we're gonna see reduced spending. We're going to see reduced spending. People are just going to refuse to do it, to spend more money. And then we are going to see corporate profits drop a little bit, which is going to look a bit like, oh, there's a bit of a bear market or recession. But really, it's because they've been rinsing it. So what I like about the markets right now, ladies and gentlemen, please appreciate this. We are living in very unusual times. We are living in a time where, believe it or not, there's a lot of malfeasance going on, and there's also a lot of sensible stuff going on. I think that there's a very nice balance between what customers need and what they want and what corporations are willing to provide them. And we've got some great companies out there and other companies out there that are going to be slow to learn that they can't keep rinsing clients or customers. So anyway, that being said, we've got a very nice weekly candle on the S&P. When I look at it from a monthly perspective, it's edging higher. It looks way better than the Dow. And the Dow's had its heyday. The Dow had a really good recovery early on. Look at the Nasdaq. Nasdaq's beautiful. Nasdaq is really phenomenally performing really well now, and it had the biggest correction. So let's pause a moment and just kind of assess here that the Nasdaq actually had the most growth if we go back to 2016 or before. It doesn't have to be 2016, it could be 2014, 2012, but it certainly has had the most growth in the last 10 years and therefore had the largest correction. So if you're a technical trader, you know that after really big moves, you're going to get a fib correction, right? So you'll get a 30% or a 50% or a 60% or whatever fib correction. We know they're going to come, and we also had it also went parabolic. So the fact that it's had the biggest correction down to that 50-period moving average and is now starting to look bullish is great. A lot of people, because it had such a big correction, they're more concerned about it. They're going, well, isn't that because it had such a big correction, is it now safe to engage? All the technical signals here are just screaming bull market, bull market, bull market. The beauty of this is that even if the market is potentially overbought with regards to the S&P or maybe with the Dow or some other sectors, it would appear that tech sectors were oversold and are potentially now still ripe for the tech year until they get back up to the old highs. Now, you can still have bad weeks here and there, but I have to say, for the most part, I'm really loving the tech stocks at the moment. So the questions I had today was how the market's poised ahead of the possible US default. Well, so far as we go through that, they are not stressing about it. They don't appear to be stressing. One of the things that I've learned in my years as a trader as well as an analyst is that the more we can see something coming, the more everyone's pointing at the Titanic iceberg up ahead, the less likely it ultimately turns into a shock to the system. It's the things that we don't see coming, such as COVID, that happen very quickly. Within a month or two, something panics. So it's those things that really catch the markets off base. So it's unlikely that the markets do not at all appear to be perturbed. They're not positioning themselves anyway, and we'll see. Which are the markets that are good for day traders? When I look at the currencies, we'll run through the currency pairs. I skipped that. I'm sorry, I will go back to that. And my favorite tech stocks right now. Okay, so we'll run through those in a moment. So Russell 2000 looks okay. It's range bound. If it goes back up to the range, that's still good. It's preparing to do that, so that's good. FTSE, just hovering at all-time highs. Come down, it's done a lower high. Still appears to be about to do a higher low. Bullish candle here. It's actually done a swing though. It's broken the high. So now we're going to see if it pushes higher this coming week. The DAX, broken up to all-time, looking phenomenally good. Very, very happy. So, and it has been this way. We've certainly been looking bullish, I would say, comfortably this year, January. Look, there's a lot of people that will post stats on how many markets that have extreme lows also manage to have great highs. Meaning that if you look at like the S&P 500 and you go over the last 50 years, you have so many extreme, bad years or bear markets, you'd be amazed how often the recovery keeps happening. And people have been posting these stats over and over and over again saying that we will recover, we will have recoveries, the markets will always recover. And then we're always surprised when it happens again, because in the moment, it's very hard for people to digest that. The ASX out of Australia is still, kind of very close to its all-time highs. Another nice bullish week, so looking good there. Let's see how it goes. And of course, the Nikkei would absolutely be the player, the man of the match at the moment, or whatever the expression is in terms of that, the player of the match, because it's just taken off. It's been in this. It's been sitting in this thing since January 2022 for almost a year and has taken off. And it's not impossible to conceive that the mini Russell is going to do something similar and just burst out of here and keep going. So is it possible that we could just be at the beginning of another bear market? Well, yeah, bull market. I'm sorry, bull market. Because, yeah, we've had a massive correction. When you look at it from a technical perspective, and you look back, going back to the year 2000, we've had a standard looking bear market. Okay, so there's a lot of things that are things to be optimistic about, guys. Don't have this be one of those moments where there was an opportunity in hindsight to buy blue chip stocks at a discount, and because this is what happens. People go, I don't understand why some people don't make money, in the stock market. It's because when it's a bear market, it's very hard for people to pull the trigger to buy stocks because they're not convinced if the bear market's over. And the only time they finally realize the bear market's over is when stocks go back up to all-time highs, and then they're back up to the old highs. And we can see that. We can see some of these already hitting up to all-time highs. The FTSE for itself is at new all-time highs. So I'm just trying to kind of mention that if you're wondering if that's the moment, we're in the moment. All right, let's move on. Let's run through stocks. Apple looking good. Look at that. Just a very steady steady climb, back up at these highs. So now we have to see what's going to happen here. It's still performed well. There was a beautiful setup during last week. These are all highlighted in my daily videos. So for my guys, and so these just talking through these, and actually I didn't trade that. I'm already plenty exposed to Apple, so no reason. I have them in the portfolio, and then there's some options contracts on them, so plenty of those. Okay, Amazon. So Amazon to me is, okay, in the start I mentioned which are my kind of favorite tech stocks right now. Amazon, absolutely. Amazon is had a massive correction, which was bigger than I would have expected. And this is something that Buffett talks about. He's always saying there are times when a bear market will hit a good company much harder and people will misread the situation. It'll be a good company whose price has been taken down. And I'm of the opinion that Amazon is doing just fine, and therefore it's recovered well from this. So it's been taken down quite a bit. But the fact of the matter is Amazon's not going anywhere. We know this, if anything. So very nice bullish candles at the moment. It's just getting past these wicks. It's looking really good. Technically, yes, it's still below that 50-period moving average. This is important. And yes, we've got the 50, 20, and 10 in the correct order, but it looks solid and it looks like it's got some good room to go to 120 and 125 above that. And when we look at it from a weekly perspective, it has just gone into a nice bull mode. All right, it's MACD's gone bullish. And where's my 50-period moving average? Have I lost my 50-period moving average? What's happening here? Okay. I'm just going to go switch this on. I'm a bit disappointed. Not really sure. This week I had some funny stuff happen with my platform. So who knows? I want this on. What's going on? Okay. How about this one? There we go. Okay. Yeah. Fine. It can be simple or exponential, guys. Doesn't matter. Not important. There we go. We're above our 50-period moving average. So there's all these things that have happened. We've got a high, low, high, high. We've broken the previous high. We've got the 10 and 20 in a bullish formation. We've got MACD in a bullish formation, and we've got it above zero, and we've got price above the 50-period moving average. That is every single box that needs to be ticked in order to say bull market. Okay. AT&T, struggling. Okay, I don't have all the answers on that one. It's worth the research. ARK Innovation is starting to look good. I like the look of it on the monthly here. So far, it's creeping high. Once it gets above, you can see how it's under pressure under that 50-period moving average. Once it breaks above that, I think we're going to see it climb. I think we're going to see a good move up to 45 and 50. So if I was a massive fan of Cathie Wood's ARK and I had a big belief in a lot of the stuff, don't forget, she's largely exposed to tech stocks and very much exposed to, say, Tesla. If I believe in all those different elements, then to me, this is a phenomenal buy opportunity in that situation. I'm curious. What are your opinion on that? Please let me know. Glencore, hovering a little bit. I mean, if it just as long as it stays above this low, we're still bullish. But we'll see. It's struggling a bit right now. Tesco has come all the way back up to these highs. Let's actually move this down and bring it there, and that's where we're at. But it's back in this area, so if we get a nice bullish weekly candle this week or next week, then it's still good. Okay, it's still intact. Amex, that I just keep joking about the fact that it looks like it's following this head and shoulders pattern. I don't really expect it to do that. I'm keeping it up because it is funny to see how it keeps moving that way. It's still underneath that 50-period moving average when you look at it on a weekly. It's still more bearish than bullish. But it's desperately trying to move higher. So it should be able to recover from that. Berkshire Hathaway is doing just fine. I did notice that although we've got some fresh highs there, we've got definite bearish divergence. What does that mean to me? It means, well, we're probably going to have a little bit of a struggle in this area. But overall, Berkshire should be good. Coca-Cola as well, battling with this area. Please note that we've got a relatively flat area here. We see the MACD starting to go, a bit of divergence there. But if it starts to flatten out, it will also survive. So a lot of these are showing the possibility here of us beginning a new bull market, guys, like a new one. Some of them are already in a bull market. Tech stocks are in a bull market for the most part, or at least the Nasdaq is in a bull market. But we might be at the beginning of the next. We'll see. We'll see how it goes. I'm just saying it'll be interesting if when we look back, this was the beginning of the next 10-year kind of bull market. Because it's, and people go, yeah, but it doesn't feel like it. The news is very negative. But that's always the case. If you go and listen to the news, go and do that at the bottom of every bull market, or even 3 months after the bottom of every bear market, I beg your pardon, and in the early stages of the new bull market. The news has never come around to it. It's very reluctant to do that. So we've got a nice uptrend here on BP, but we're back into a crucial area. So it needs to see if we can find some support this week. Same will go for Exxon. Exxon is struggling a lot here, certainly in this area. Although it had a big move in October, it really hasn't gone a lot higher since then. And again, it's tied to crude oil. When you look at oil prices, they're not going anywhere. So there's no reason to expect those to be doing anything right now. We've got General Motors at the bottom of its range, trying desperately to turn around, 4 weeks hovering around that level. JP Morgan looks like it's going to recover. That could be a very nice higher low and a break higher, so that's good. Adidas battling in this area. Okay, battling. These have now gone into a bullish formation, but it's battling way more than it should. This week, I really want to see you recover and break above that 165 area. If you break back down and we break below this area, then the picture changes. Meta's doing fine. Meta just keeps going. So you can just see how the MACD is struggling here. It's giving really weird shapes because of the gapping and all kinds of things. And yeah, at some point I expect the weekly to do a retracement. But other than that, looks good. Morgan Stanley looking more bearish than bullish. It's got to find some support in this level at that 80 level or 81 level. I was highlighting this as a potential bullish move, but it doesn't look that great now, does it? Nvidia just on fire. So looking good. It's got to come up to those all-time highs. Netflix is doing well, by the way. Netflix has broken through a real bearish patch here and has broken up to that. So if we can break through this, that's on it. It's looking good. So Netflix looking good, Meta looking good, Nvidia looking good, PayPal not looking good. Spotify is back on track. So in fact, the odd ones out here would be, kind of PayPal. And you can see Spider also looking okay. I mean, very wishy-washy the last 3 weeks, but should work its way out of this slump. We got FedEx. That was a potential bullish setup here. Indecision here. So this looks similar to, what did we have here? Was it Spider where it didn't look that great? No, something similar there. Tesla is still in this zone. It's not free and clear yet. It's still downtrend on the weekly, but it is not looking weak. If it was very, very weak, it would just be failing at every level here and start to break below these lows. It's not looking strong, but it's not looking weak. Okay, so I'm going to say I think it's got some room. It can keep pushing higher. Let's see. Vanguard is starting to creep and break through the danger zone here, which is great. That monthly looks good. So Vanguard's looking good, solid, like it. Very similar to the S&P as well. Let's quickly look at bonds. Bonds looking very bearish. There's our momentum candle. What does that mean? It means that this is likely the breakaway candle. We're going to see the market, move lower. What is going on? Same thing here. For now, I expect this to be under pressure. And look at this pressure. It's just into the moving averages, into this level, moving down. Let's look at cryptos. Okay, so for now, although cryptos aren't really booming, I don't quite expect them to tank. I mean, I'd be surprised. Of course, it can happen. I'd be surprised. I think for now, I expect them to just tread water to try to stay in this area. Ethereum is staying in this area. I would expect them to stay in this area or climb, but that would be my first one. I think that's the most likely outcome here. Whereas my second one would be that they tank. I know they're battling a bit with some resistance here, but they really should be able to do it. I have to highlight, though, that Solana is looking ready to break lower. Okay, it's looking quite bearish at the moment. But we'll see how that goes. And we've also got Cardano. Also looks like it wants to just keep hitting lower, and Binance as well. Most of them aren't looking. So the ones I'm following are really I would focus on if I really want to get a sense. Unless I'm looking to take advantage of those shorter term moves, I'd be following Bitcoin and Ethereum to get a sense of where it is. Whereas if you look here at Ethereum, it's actually the other way. It's producing higher lows and trying to get ready to break higher. So I'm not sure what it's waiting for, but again, this is clues that the market is healthy. We've got cryptos doing their thing. We've got tech stocks that are kind of looking really nice and bullish at the moment. I've always said in the past that cryptos and tech stocks are very much joined at the hips, and therefore if they moved higher, we're not necessarily seeing all the markets move higher, so we haven't got everything in bull mode just yet, and that could be a potential explanation for this. Also, I think that if the markets are cautious about getting back into loading up on everything in their portfolios, definitely cryptos are going to be lower on the list because they're more volatile, but they're on the list. And that's why I say I think it's also, again, more likely that when that moment comes, they'll be catching up. And of course, they'll be underpriced, and therefore they'll grow fast. But for now, not expecting much more than that. Okay, so I also said I'd very quickly look at the currency pairs of note just to see what I like here. So let's run through them very quickly. Euro pairs there looking looking there. These are the yen pairs. My favorites really, I think, for this coming week will be the yen pairs. They're continuing to push higher. Might not necessarily be on every single yen cross. For example, maybe you don't like Aussie yen or Kiwi yen, but each one is worthwhile looking. Kiwi yen here, you can see is looking very good. And these ones, obviously they're due at some point to have a bit of a retracement, and for day traders can take advantage of both of those moves to the upside. But Swissy yen, a lot of these are still looking quite good. Let's run through some of the Swissy crosses. Some of the Swissy crosses, I was looking for those to turn around. So it's a mess. It's not really tradable, but I'm curious to see if it's going to turn around. It's lost its bearish momentum. It's going sideways now. It's got a bullish MACD. A lot of them hint at the fact that at some point they could very well start to push higher. And again, like, they're just not doing anything, but they have the bullish divergence and they're all looking like that's the direction they want to go in. So there could be that. And then any of the CAD pairs, not really sure at this time if they're offering anything that looks like it's got much value. The CAD pairs are looking more bearish than bullish. So my favorites are going to be looking at those crosses, like the Swissy crosses, the yen crosses definitely up front, and then potentially CAD at the end of that kind of line. So I'll leave you with that. Ladies and gents, have a great week. And yep, enjoy.